Hi, good evening. Hi, Steve. Hi, Raman. Hi, Joy. Good evening, everyone. Can you see my screen? I don't know what's wrong. It's not coming up. It's there. So let me wait for a couple of more minutes, and then hi, Nehal. In case you have any particular thing in mind, do let me know so that I can cover that in today's session. Today, like more of it, I wanted to cover on option strategies and how to create Fibonacci and regression channel. I'm more focused on that. All right, so put in your topics which you want to understand, and I will explain. Hi, Manish. Hi, May. Hi, Raman. Hi, Mechnocrat. Good evening. So do let me know what all topics you want to cover and you want to understand, and I will explain them in detail because I'm dedicating about 30 to 45 minutes to cover all of the basic aspects. First thing I wanted to cover is candles in the price section, and how does a price section helps you figure out where the market direction is. Hey, Alex. All right, so if we have substantial people, uh, good good evening, everyone. We'll start the options strategies as well as price action in about 5 minutes at 6:05. In between, if you have anything you want to understand or you want to have any clarity, do let me know. I'll be covering Fibonacci, regression channel, uh, price action, candles, and a basic understanding how to make something work in terms of chart setup. All right. So I'm just waiting for your connectivity. Like once many people are there, we can get started. Right now we have about 12 people. Hi, Vikram. I can do one more thing. I can put on this link on you on Twitter because I did change my time multiple times because I was out. Let me just pick up and right here. Here is the link to join. The very first thing which we need to do is to make a journal before doing anything else. That is a very important aspect. I have some example in my journal. You should have this journal in front of you when you are doing a trade. We'll talk about this. We'll talk about the simple chart setup. I'll pick up SPX. I'll clean everything here, and then we'll talk about this. How to make Fibonacci, how to make all these levels one by one. If and top of it, we'll be talking about option strategies. And then, hi Vikram, hi RK, hi Kiran. And then if we have time, we'll do some Q&A on the educational part before jumping on to uh, the main analysis for tomorrow. Okay, my criteria is pretty limited. I'm focused on my watch list. If something comes along in that watch list, I try to tend that. I do not want to jump into so many other stocks because then I lose my focus. See, our goal is totally, Raman, the goal is to make money. and to find opportunities. Each stock gives you opportunities. Each single stock gives you ample opportunities to trade. So my focus area is I have a list. I look into that list. I observe where they are moving, what is the price action, what are those levels, and I try to trade in that particular area of that stock. You can pick any of the stock, and if you have your uh, analysis figured out, you can implement that analysis on top of it to get very nice execution levels. I hope that I answered you, Raman. Hi, Srini. Hi, Raj. And once again, good evening, everyone. So, first thing, I think we are good, 6 or 5. So, good evening, everyone. Welcome to my channel, YouTube Live, Navaldeep Sikka. Hope you had a great weekend with your family. So, today my agenda is twofold. First, I wanted to give you a brief understanding of how to understand the charts, how to make certain levels, and how to make use of it. Then I will be explaining you the Fibonacci regression channels. And third, I'll be giving you a small understanding of what to do with EMAs and how to incorporate those EMAs. All right. If you have any additional question for me, do post that in the chat and I will pick that up and I will answer it. And once we are done, I'll be picking up the daily analysis and I'll be focusing on the list I'll be doing in front of you. And then I will be sharing a Zoom link, which you all can come and connect and we can do have collaboration and Q&A after that. All right. So we are good. So very first thing when you come for a trading is to understand a candle. Okay. So let's see what is a candle. A candle has 4 aspects, and this is for this may sound pretty naive to people who are into the trading, but I'm just considering that everyone here is to understand. So we'll start from the very basic. So this is called a candle. This represent, and these are the time frames. So this candle has a lifespan. It starts a lifespan in 1 minute, finishes in 1 minute. This starts a lifespan every 5 minutes. This has a lifespan of 1 day. Sometimes you will see candles having lifespan of week. So each candle has a lifespan. In a candle, there are 4 attributes. One is the open price, then is the close price, then the low it made, and the high it made. This piece, you see this green block, this is called the body of the candle. The tiny line you see here, this is called the wick. So this is the wick, this is the body. Now, if a candle is green, it means it opened at a price and buyers came in there and then took the price up, 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 up to here. They could not sustain it throughout that day. And at the close, they came down here. And the candle is green because the price it opened at, supposedly this is SPX candle, this candle opened at 4406. And throughout the day, it went up and up and up. During one moment in a day, it went on to make 444865, but it could not hold on to that, but definitely ended at 4448. So this candle came out green. So this means that buyers were interested to buy in this particular index. Similarly, if you pick up any stock, all right, for example, you pick up Visa, MasterCard, Boeing, Caterpillar, every candle tells its own story. And we need to understand a candle may have multiple shapes. A candle may be like this, where you have a small lower body and a larger upper body and a medium size larger upper we can and a medium sized body in between. This means it made the low, it opened here, closed here, it tried to go up but it failed. It means there was a selling pressure here and selling pressure continued and it could not hold on to the opening gains and then went on to made low, but it bounced right from there. then this candle tells you everything about what happened to a stock. You need to understand that even if you use a simple candle pattern or a candle indicator like this, you will be able to make a good trade out of it. The only thing is you need to start observing what the candle says. All right. So this candle here tells you that, yes, this is the open price. This is the open price right here. It made a low after opening, but then it got the strength. Buyers came in and then went on to make it to the top, which is towards the high of the day, could not sustain, closed, but still at a very higher price from where it opened. So this is called the price action. And now here, if you have a volume backing it up, this is futures. Let me pick up SPY. SPY is clear. Yeah. So here you will see that there is volume here. So here, each candle with a definite amount of volume backing it up will tell you a story. Suppose this is the candle. This candle opened here. It tried to went up, could not sustain this level of 444, came down. This means that yes, it is struggling to cross this level. It had the strength because it had some volume to move it up, but it did not have the strength. So people came and they start booking profit at this level. That's why it was not able to close. Any close above a certain level will confirm that yes, the close is going into a strength. Okay, look at the close on Friday. This is Friday, right? So Friday we opened at 43, 439.50, and then we could not break out, and then we just went down, 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 and down. Did not close at the lowest of the day, but we did came up and close right in this area. So it means this there was certain selling pressure. The volume was still all right. It was not massive as we had in the previous few days. It means that yes, there was some profit booking for sure, but it was not full-fledged selling. Okay, so this you need to understand. And then once you understand the price action between the candle, that where it opens, where it closes with the volume, then the next piece is to understand the candle patterns. There are many candle patterns which we use. I have certain here, which I use for definition. So let me pick this up and explain it to you. These are called single candle patterns. Like these candle patterns are bullish in nature. They are individual, like they will work on their own. If you see in a downtrend that yes, there is a hammer, this is the hammer where you have the body on the top and wick on the bottom. There is hardly any upper wick. That is called a hammer. When you have this and it happens during a downtrend, it means the pressure was initially to take it down, but finally buyers came in and they moved it to the top. So they kind of negating the downtrend, and that shows a reversal. So hammer on a single downtrend, like in a single downtrend lane or a channel, can be a very useful indicator, especially on a daily time frame. It will give you an idea that yes, this is a reversal. Then you have an inverted hammer. Inverted hammer is where you have the candle, but in this candle, the wick is upper and the body is lower piece. This again shows that yes, there was a selling pressure initially from the top. It tried to break out, but still it hold and did not make a new low at the close. It was able to make a new, it was able to like make a bottom. So inverted hammer is also pretty good. Then you have a dragonfly doji. Dragonfly doji is a candle which usually comes in a downtrend or an uptrend. When it comes in a downtrend, it signifies that open and close prices are exactly the same. So in this case, what happens is if you are in a bullish trend or in an upward trend, this dragonfly doji happens, it means trend is about to change. Okay. So these are three important ones on a single candle for a bullish side. Similarly, we have a single candle pattern for the bearish side as well. This is called hanging man. So when a hammer happens in a downtrend or this candle, it's bullish. When the hammer happens on a bullish trend, it's called hanging man and it's bearish in nature. Similarly, you have an inverted hammer on a bullish trend that is called a shooting star. Okay, this shooting star is telling you that yes, you have went up literally very strongly. Now I'm giving you a bump. You cannot move further. So you need to understand a difference between a hammer. Hammer usually comes in a downtrend. Inverted hammer usually comes in a downtrend. When you see the hammer in an uptrend, it is called a hanging man, meaning that yes, I'm stuck with this umbrella, I'm going to fall. When a shooting star, which is an inverted happen on a bullish trend, it means you're getting a push and you are going down. Okay. So these are very important to understand because most of the people are confused where to use hammer and where to use hanging man. Okay. So I would just simplify you that yes, use 2 or 3 examples of hammer in your daily charts and try to see, like, let's find out a hammer here. Let me try to find out show patterns. So these are the patterns. If you're using toss and you don't know how to see the patterns initially, you can simply choose this one. Let me show you how. There's an option called patterns right here. You click here and then you can choose what all patterns you are interested in. It gives you option. It gives you classic, which is double top, double bottom, falling wedge, head and shoulders, inverted head and shoulders. You can use that, or you can use any of the combination which I just said, like a hanging man. Okay, hanging man or a hammer. Okay, I'm just taking these two as an example. I'm just cutting down on Fibonacci and 3-point retracement. Yeah, apply. So I'm going to see my patterns here. If they are there, then they will be reflected. See, it's right. Spinning, yeah. This is there. Let me just change the color so that it can become much more evident. This is there. I'll make that in a blue arrow, and hammer. I'll make that into so here you see the icon came and it shows me that yes, this is an inverted hammer. Okay, so this way you can also set and do the back testing just to make sure that yes, what is your understanding and what is the understanding of the system? Are they working in line or not? Otherwise, you need to go here, change it according to your configuration. All right. This way you can test that, yes, my understanding of hanging man was this, that in an uptrend or in a downtrend, this should have happened. So you need to do a back testing while evaluating this candle patterns. When you do that, you will understand the response of the next candles after these patterns which came into existence. And once you start doing that, repeating that exercise almost on daily basis, you will see that yes, your understanding of the next market direction will get better and better. Okay, that's about single candle patterns. We have so many candle patterns, but I'm focusing only on couple of which I have here. Then we have two candle patterns, and you must have heard me multiple times talking about two candle patterns, especially inside day and bearish engulfing. Okay, so what do you mean by bullish engulfing? This is the bearish candle. Once the body of the next candle, which is this one, covers the entire body of the previous candle, it is called engulfing. It is called bullish because the previous candle was red and the next candle was green. It took over the entire selling pressure and just negated any selling or negative impact on that candle and closed on the top. So this is bullish engulfing, and this is very positive. Okay. Then we have inside day. And this is also called as bullish harami because here the previous candle is totally red. The next candle is in between. If you add volume to it, it will become inside day, but here it's called bullish harami. In this, if there's a breakout, that breakout, because here it has not made a new low, plus it tried to close towards the higher end. It shows it has taken all the selling pressure. All right. And once you have absorbed all the selling pressure, you have strength to go up. All right. Similarly to bullish engulfing and bullish harami, we have bearish engulfing. In this case, the previous candle is all green. From open to close, it is all green. And then the next candle is completely covering the body of this candle. It means it has engulfed the entire candle. So whatever the buying pressure it had, it has taken over the buying pressure and provide enough selling and close it below the body of this. It means the next candle is going to be negative, most likely. Like 90% of the time, it is negative. Similarly here in bearish harami, again, it's an inside day, but the difference is it has a green candle to begin with, and then the next candle is the red candle. It is not able to hold the gains it did. So it's kind of easing off, consolidating. So next candle most likely will be a bearish candle. So these are two basic two candle patterns. They are really important. I tend to use maximum times these two, and they tend to work out pretty well, and they have reasonable results as well. Then there's a combination of three candles. You must have seen me using morning star or the evening star. I have not used bullish abandon baby, but this is a really rare candle pattern. Once you see something like this, you need to just go long on it. Even morning star is pretty good, and morning doji star is excellent, but this is very rare, abandon baby. So when you find something like this, where you have a green candle, red candle, and then there's a gap, then there's a doji, and then there is a bullish candle. This is pretty rare. And you can search for all these candles in the scanner. You can go here and you can define a condition right here. Let me add a filter. You can choose a pattern. Okay. In the pattern, you can choose any of this. So let me also show you this before I go and explain. Let me just reset this. Remove. Okay, let me add a filter. I'll add a filter called pattern. And I'm taking both the bearish trend and the breakout. Okay, so let me just pick up one at the moment. Let's say ascending triangle. Okay, I'm taking a time frame of 10 days and my 30-minute candle. This is a candle on 30-minute. Okay, now this gives you an option that you can scan in your entire stock list, or you can scan in your personal stock list, which you have created from the watch list. So let me just scan this. So here it's telling me that yes, ascending triangle on the bullish is setting up in Adobe. I can go there. So irrespective of looking at multiple things, I can simply go there and see. And what is an ascending triangle? Ascending triangle is simply you have, do we have here? No, ascending triangle, let me just show you. AMD on 30 minutes. Ascending triangle is that yes, you are moving in a direction upward by making a base. Okay, this is making an ascending triangle. The base is still there and you're making a triangle. So usually there's a breakout after this on the upper side. So you can try multiple patterns, and then from multiple patterns, you can evaluate that, yes, I want to try hanging man, hammer, try and observe that, try to do a paper trade on it. And then you will see that, yes, it's working out as per your expectation. If not, then you need to check what are the gaps, write down the gaps, and then you can discuss with anybody, or you can reach out to me and we can see where are the gaps and what can be done to resolve that. Okay, so coming back to the candle patterns, I have told you the single candle patterns, hammer, inverted hammer, and doji. We talked about bullish engulfing, bearish harami. I'm not focusing on all of them. I'm just giving you the patterns which are useful to begin with. Okay, then the morning star. Morning star is really, really important. And I have examples for morning stars because I use this multiple times and I have posted this as well. So this is the morning star right here. This is a big red candle. Then there is a small green candle making a new bottom, and then you have a green candle. This is a complete morning star, and this was W. And look at that after the completion of this morning star. It went up, 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 back to back 6 or 7 candles. So this is a breakout. Okay. So every time you see something like this, you need to understand that yes, previously it has done at least 7 candles back to back. This may be doing 4 or 5 candles back to back. You can take a chance. Most likely you will be getting success on that. The same thing I have done in AMD multiple times. When AMD was doing this, it was struggling in this range. My AMD chart is so messed up. I don't want to use this. Let me use something else. Apple. See, Apple. Apple is showing you a bearish engulfing. This was the green candle. This was the bearish engulfing candle, which covered the most of the body. And what happened after it? Bang, 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 bang. It kept on doing that. Here you had the bullish engulfing. Here you had the bullish harami, and after that you have a good move up, up. So similarly, you can try this. This is bullish engulfing, and look what happened after that, bang up. So you need to do, first and foremost thing is to understand the candles. Okay, understand the candle, understand simple candle patterns, and use 2, maybe 3 candle patterns to understand what is the price action of these candles. And next step you need to do is you need to go back, do some scans, and check that yes, historically these patterns were set up in these particular stocks. Let me see what happened after those candle patterns which were there. Once you see, you will start to believe in the strength of those candle patterns. And once you have a confidence, you can use that confidence and replicate that going forward. There's no need for fancy indicators, A, B, C, so many things. No. If you understand candles, that is more than sufficient. All the other indicators can give you an on the top confirmation of what your expectations are. All right. So this is the first piece which I wanted to talk. Second piece which I wanted to talk was setting up the EMAs. Most of the people ask me which EMAs I use. So let me just show you that. I have moving exponential 12, and I can explain you. I have given it a color green. It's 12. It's on the close, and I have set show breakout signal yes and no. Okay, you can set this up. You can repeat the same for 34. And once you do that, and just make sure the difference is 34, I have made it as red. Now, if you have heard me in the past that I'm talking about the red line and the green line, the 12 EMA is a fast EMA. Fast meaning from the last 12 days, it picks up the exponential average and evaluate it. In the last 12 days, the average will be much sharper as compared to the last 34 days. That's why it's fast. It will change much quickly as compared to the 34. So when you see the 34, which is the red EMA crossing over, meaning the stock is not getting that much of strength. It is losing the momentum. When it is losing the momentum, it is an indicator that yes, you should not be going long in it. You should be taking a pause and then evaluate that, yes, am I right going long in here, or I should pick up something else. So anytime there is a crossover, this is a confirmation of a bearish trend in that particular stock. Okay. Now, how do you trade EMAs? Now, you have EMA, you have candles now, you have a basic understanding. Now, in order to use EMAs, you need to set two of them. People use 9, 21, 50, 100, 200. Entirely your choice, whatever you want to use. Make sure you do your back testing and see whether it works for you or not. And if it does, then follow that. So whenever we have a candle, there is always a relationship, a love-hate relationship between the candles and the EMAs. A candle cannot live far from the EMA. It will always come back and hug each other. Okay. So if there is a candle which has gone up and away from the EMA, like here, this is the bullish candle, it has gone away. At this time, there's no point going long because it is far away from the EMA. When it is consolidating around the EMA, that is the best entry time. Once it is up, you need to wait. You need to wait because if you buy here, there's a possibility you're buying somewhere at an expensive price. You will have option to get it cheaper. It may not be soon. It may take 3-4 days, but yes, you'll be getting a cheaper price. That is for sure. And see here, you got the cheaper price, but did it hold on to that? That is the second thing you need to keep in mind. When you are making a 12 EMA or 34 EMA, they are usually the support and the resistances. So when they are acting as a support, your candle should have a close above it. When you are finding them as resistance, your candle will have a close under it. Look at here. Here, this is the positive candle. And in this case, the important aspect is that it broke out above the 12 EMA and then sustained it. Went up and up, up. Here, this candle could not hold on to the 12 EMA. It broke it. And then it went on to test 34. So for me, because I use only 12 and 34, so a break of 12 will tell me that yes, the next support price will be 34. A break of 34, then I use Fibonacci to find out where will be the next support area. If it is down and the candles are away from the EMA, again, the love-hate relationship is there. Candles will move up, EMA will move down, and they will come and hug each other. You see here, this candle is pretty far from the EMA. So there's definitely a potential that yes, this candle will move up and test or touch the EMA. And it did, right on the money. It did, could not break out, it failed. Once it failed, it will come back. Again, it sees that yes, I have a love-hate relationship, I should go up. It did. This time it tried to close above it and was successful. And when it was successful, the next candle went up. It opened up, and then from there on, it's the next action. Okay. So when you are trading a EMA, you need to have your closing prices pretty important. They should close above the red or green line. I'm not calling them 1230 for red or green line. It's easy to remember. Second thing is your time frame. For an intraday chart, I prefer to use a 30-minute candle because that defines my stop loss. So in case of a 30-minute candle, what do I see? I try to see whether my closing is above the 30-minute candle, above the EMA or not. If it is not, then I'm just cutting my entry. For example, this was a breakout and I went up, and as soon as it went up, I will keep a stop loss in mind that yes, my stop loss is somewhere around the 12 EMA. Okay. And once the 12 EMA is there, that's my cutoff point. Here it closed below it, so I need to exit. Next time it went up, I had the opportunity to book some profit, but no, it's in a very small range. So yes, I will exit it. But this has already shown me that yes, I should exit. Here also, the close was right on the 34 EMA and the next candle was above it. As soon as it did up, it shows this move, and the next candle, you have a target of resistance of this. It broke this, and then you are here. So this will work if you do it properly. The most important aspect here of trading between EMAs is you need to respect and you need to take into consideration that yes, at least 30-minute candle is the time frame which will be good enough. People use 1 minute, 3 minute, 5 minute. That is too quick. If you do that, you have more possibility of doing more trades and losing more. If you take 30-minute candle, that's an ample time frame that yes, if the stock price is not holding above this range in 30 minutes, it's sure to go down. Okay, that's the important thing to keep in mind. Then the last two things which I wanted to discuss was Fibonacci and Fibonacci extensions. See, Fibonacci is really important, and you can draw this Fibonacci at any given moment in the past. You need to choose a nearest low and then nearest high, and then make a extension out of it. But it will not give you the correct set of values. It's a tool which you can apply anywhere, but you need to understand where you want to use this tool. When you want to use Fibonacci extensions, you need to keep one thing in mind that yes, you are looking for a move, a possible move in the future on the higher side. That's why you're looking for possible extensions. If you're looking for the possible jump, like for example, you have Amazon, okay, and you're interested to see that Amazon has dropped from 3,700 to here. Where will be the resistances for it to move up? You should use Fibonacci retracements. But when you are thinking that yes, where should be the future moves for Amazon, future resistances for Amazon above 3,700, you should use Fibonacci extensions. There's a very minute difference between it. You need to start using it. You will have to spend some more time in practicing putting those Fibonacci extensions in and out. And once you do that, you will find that yes, your candles have started to come align with your Fibonacci levels. I can tell you how to use a tool, but I cannot tell you where to put this Fibonacci, because this will come if you practice it. It's a tool which you can use, but it's a tool where you need to spend some time to understand what are these. And once you have defined those Fibonacci extension, do not remove them. Do not remove them until you have reached at least 261.8%. Otherwise, there's no need to remove those Fibonacci extensions. Okay, so this was a very brief overview of what I wanted to share with you guys, so that people who are new or people who are trying to learn technical pieces of it, you should focus on this three aspects first. Once you do, then you can execute trades. And for that, you need to do some paper trading. That yes, this is my understanding. This is the candlestick patterns. This is the Fibonacci level which is coming for me. Let me try it out. Do not try with the real money. Try with some paper trading first. Build your confidence. Once you have a belief in yourself, that yes, it is exactly similar to that. Yes, when a young 16-year-old kid goes to drive, the very first time he put his feet on the accelerator, he tries to he's not smooth. But next 5-10 days when he does it, he gets a hang of it. And within a month, he's a smooth driver because he has now confidence that yes, he can manage it. Similarly here, you need to have some practice understanding the candles. Do that practice on paper trade, build that confidence. Once you have that confidence, you can ride it. Okay. The other aspect which I wanted to talk was option strategies. Option strategies, like I'm not going to go in too much detail, but I wanted to give you a couple of strategies, and especially for the people who have account which is less than $25,000 and they are struggling to close because they have a limitation of 3-day trades in next 5 days or 5 business days. So the best is, whenever you are buying an option, do not buy a spread to begin with. Never do that. If you are buying an option, buy naked. If it is going in the direction you expect it to go, then let it run. Once you are comfortable that yes, I am happy with the profit, sell the nearest strike. For example, let's say I'll pick up this sheet. Let's say I have Amazon. Okay, I have 3,500 strike call option. Okay, this is for 10.15. It is trading at $30. I'm just giving rough estimates. Okay, now you entered at 30 and stock was, let's say, 34.80 at that time. Now stock is 3,500 and the price of 30 has gone down to 39. You are in about 9 points profit in this. But because you are less than $25,000 account, you cannot close it. What you need to do is you need to find an option whose price is more than 30. So if it is 39, maybe 35.10 will be trading at 35. You need to sell this option. You need to buy this option as open naked. Once it is in profit, sell the option with minimum profit. Now, by doing this, you're getting 3,500 back. Initially, you invested 3,000. You're getting 3,500 back, meaning you got your capital, you got some profit logged in, and you have that capital to trade in again. And you are still in the trade. Now, if it stocks moves up to 35.20 on expiry, all right, you will still get $10. 4 is already there, so you will be getting 5.5, let's say 75. Sometimes you do not close on 10. So you will still get 575 and you're still in the option. Okay. You need to use this. If you start by doing this initially, you will not have enough profit. Supposedly you are going wrong. You bought at 30, the same example, it's trading at 25. Okay. Even then, in that case, you need to do is, if you are trying to save your capital, do the very first thing. Find an option which is nearest to your price. You bought 3,500, it's trading at 25. Again, sell 3,510. It may be 22. You still got your, this is 3,510. You still got $2,200 back from the initial investment of 3,000. Okay, which is this one. But you still have $300 invested. You do not want to leave that on the table. Do one more thing. Do a credit spread, 3,510, 3,520. This will maybe give you $1.8 again. So you will be making a butterfly here. You will have one lot here plus, you will have one lot negative, one lot negative, and one plus. And this will become a butterfly for you. Now on expiry, if you get 3,510, luckily, you will still make at least $8 to $9 out of this butterfly. So you will have the possibility of recouping your losses. Plus, your now investment is only $2,300, like which is out of $2,500. You have already lost $500. So there's nothing to be done there, but you can still recoup before struggling with PDT, and you carry on that position. This is really, really important aspect where many people tend to struggle. They keep on carrying the option thinking that, yes, oh, I may get something out tomorrow if I leave it on a table. There are Greeks which are associated to the options. Those Greeks are right here. Delta, this means that for $1 move in the equity, this will be the move in the option price. So here, if you look at 32.50, it's showing 65 cents. So if there's a $1 move in Amazon, that will correspond to a 65-cent move in the price of the option. Then you have theta. Theta tells you that, yes, by the end of the day, the option prices will have a decay of 4.27. This is there every day, no matter what you do. Even if the price opens same next day, you will have the theta decay to it. So when you are doing a carryover to the next day, you need to consider that, yes, if it moves about $5, theta will equate to it and you will not have anything on your options. And you must have seen that the options which are weekly or maybe 2 weeks out, if the stock has moved up $10, $20, you will see only $1 or $2 move in Amazon. All right. So this you should be keeping in mind. The other important thing which you're keeping in mind is the implied volatility. If you have an implied volatility of 50, 60, 70, 80 or above, that means that option is expensive. In that case, you can start by a spread. But when an option is trading at a volatility of 20 to 30, that means the option is cheap. And when the option is cheap, you may not start with a spread, but yes, you should add a spread once you're in profit. Okay. So these are the other things which I wanted to share with you all. Now, if you have any questions related to that, do post that in the chat and I will answer that. And then we can start on to our daily session. I can see some of the questions here. Let me read. Raman wanted to understand what criteria you consider to pick a stock for the week. So as I said previously, I have this watch list. I look at the watch list and I see whether they are stocks which I observe are working in the range for my levels. If they are in that range, and if the market is in a trend which I'm looking for, I pick that trend and pick that stock. I do not go for all the other options to scan. The only option which I use is inside day, and inside day I scan in my watch list. So this is a candle within a candle with the volume within a volume. So these are setups which I pick sometimes, like Snap, Walmart. I can pick them up and consider into my list. Otherwise, I have a very flat list which I tend to focus on. Then Ramesh, option selling and buying difference 10 or how much we gain or loss. For example, 15 October 140 call buy and 15 October. See, in this case, you will not gain much. That's what I'm saying. You need to let 140 run for a while so that you can have some profit in it. And once you're in profit, then there's point selling it, because the a firm stock is already above 140. So when it is in the money, you're already paying too much premium for it. So if the stock moves a little down, you will lose. And if you're making a spread, you're not going to gain anything because you're already in the money. If you have to make a spread, try to buy out of the money options if you're trying to make a spread. Namit, I look at Adobe Weekly. It has good. Okay, I'll check on Adobe. Set up regression channels. Okay, so regression channels, I can show you. I'll go to charts. This is the regression channel. No, not there. So this is the regression channel. What I've done is I have added these curves at 1 of 1.05, 0.5, 1.5. So this kind of gives me a cushion area on the channel. Usually people do a channel at 0, 1 and -1. I have done the channel and extended it to -1, -1.5, 1, 1.5. So this gives me an idea that yes, anything in this range should be good enough. You can add as many as coefficients you want. I'm using this, and I've given them separate colors so as to identify that yes, what is the most significant one and what are the uh, not so important channel lines. Okay, then why do you use 30-day, 30-minute for your time frame versus? See, 30-minute candle is much more reliable as compared to 105-minute or 10-minute, because the market is so volatile that 1 minute, 2 minute, or maybe 5, 10 minutes is too much. Plus, I am at work, so I cannot observe the market all the time. So I set up alerts based on the 30-minute candle, and that gives me a little bit of relaxation, because if there are certain spikes up and down, I do not get panicked by that. That is the reason I prefer to have time frames which are 30 minutes at least, because that gives me that reliability. Sometimes we have a spike down, spike up because of certain news, and if I have a stop loss, it totally changes it. Now 30 minutes is a decent amount of time to observe any news or any event. That is the main reason I use 30-minute, Steve. So anyone else has any other questions for me? Okay, so let me get started to my daily work. Now, in case you have any questions, guys, for me, you can like tweet me, tag me, and I'll answer. And if needed, we can have one more sessions, specially dedicated to option strategies. And we can do multiple, like I have done multiple levels of technical trading. So if you want to go in more depth, we can do that. I don't understand the 30-day portion. 30-day portion is by default, it's available here. And 30-day, it's a by default option, Steve. I don't choose anything. It's a by default option which I've been using. 1 day, 5 day, because I'm more interested in looking at a bigger picture. So that's the 30-day gives me a bigger piece. Scalping, I do not do scalping and I'm not good at that. So yes, 3 minutes is a good setup for scalping. Is Fibonacci extension 2 is a standard built-in TOS? Yes, it's a standard built-in TOS. There's nothing specific here. It's pretty standard. The 30-minute, 30-day gives you this picture pretty clearly. If I do 10-day, I do not get the proper picture. Right now, you see on 30 minutes, it is making inverted head and shoulders, and it did it break out. Now, if you see it, it's making a cup, practically a cup and handle. Okay. All right. So anyone else? Otherwise, I'll be jumping on to other stuff. All right. So let me just go to the daily levels. So let's see ES first. So this is the list which we had. Before going into the, so this is a trading journal which you should always have it with you. Just put in your information here that you're entering a trade, why you are picking up this trade, what is your emotional state. Either you are occupied in work, or you have a meeting, or you are free, you're relaxed, or you had a fight with somebody, you're annoyed. Just put that. Or you have lost so much, just put that in mind. Whatever you have, just put it there. Then check what is the candle pattern. Do you see any candle pattern there? Yes or no? Any news? Yes or no? Check the 1234 on the candles, how they are behaving. Check if there is any option flow coming for it. See if you're trying to chase. And then what is the risk here? Are you confident? What is your conviction level? Put this information before you jump onto the trade. The reason for doing this is once you start putting this information, first, you will take a minute or two to write down this information. Second, it will give you a check that yes, when you're looking at a trade, it will give you another perspective, which you may have been ignoring because of certain reasons. Now, this journal will help you to take a break, look back, and then reevaluate what you are doing. And if you still are confident, put that information, and then once you close this trade, look at what was your state, and then compare it whether you were right or not. And once you do that, you will have confidence in your planning and your trade execution. This is really, really important. Sajjad, for Fibonacci extension, can we use multiple times in multiple areas of the chart? Yes, you can use, but I prefer to use extensions only on daily, but in multiple areas, yes. Okay, so again, this is our ticker for tomorrow. So let's see, we have ES, Triple Q, Apple, AMD, Amazon, VA, Google, NVIDIA, and I just did a scan. So we have Snap, W. I want to include W here and Snap. Snap is already there. So I'm just getting rid of pins. I'm adding W. Any other ticker you want me to evaluate? Thank you, Saurabh. It's been long we spoke. So guys, any other ticker you want me to evaluate? Okay, so let's start from here. ES. I'm going into my daily candles and just removing the volume from futures and equities both. And first I want to see on the weekly, what's the trend on the weekly. So on the weekly candles, you see we have an inside week. This is the candle within a candle. The important aspect is that yes, we've been holding 4347. And 4347 is really, really important. This time we are just there on this long-term trendline support. If we bounce from here, that will be really, really good. And then we have 4485 on the cards. If we break here, then we are going to break big time. Okay. I'll include all your tickers one by one. Just give me a couple of minutes. Let me finish this one and then we'll go one by one. So here we have on the weekly candles, you see an inside week. Usually an inside week follows up with a very great move. And now we have earnings coming up. And usually in earnings, we can have a very volatile season. So right now, this blue line has been a very strong support, even on blue and the green line. On the weekly candles, this has been providing a very good support area. We have not closed below this. The blue line has taken that. So again, we are at the same zone. If we take a bounce from here, that will be really, really good. We'll be making a higher high, and then we are starting from there. Okay. Now coming and breaking it to the daily range. Daily range, this is the trend line which I have drawn and which has been from here. We are right there, 4370. 4370 is also the 12 EMA right here. And it's not coming up here. Okay, let me just hide the patterns. Ah, 12 EMA is again 436994. So that's about 4370. Again, that's properly right here. So if we break this on a half hour, we may be going down. But if we take a support from here and we break above 4385, it will be a good positive bull run. So again, I'm just calling this as buy above 4385. And stop loss will be 4370. And target will be 4397 first. 4397. 4407, 4421, and 444. I'm just giving you more targets because it's looking in that direction. This time I'm about 70% confident here. Short, we held 4380. So I'm not going to mark this now. So I'm calling this below 4370. And stop loss will be 4385. Target will be 4347. We'll change the direction and the trend once we break below this. I'm not super bearish at this moment. Neutral is my most of, like, I would call this as a positive, in fact, calling it neutral. And we'll call this as neutral. Triple Q. Triple Q on Friday again closed right at the support 361.44. It did not fill the gap, and that is interesting. If we hold on to this gap, this will be marked as super bullish. Okay, so above 361, and that should be a stop loss. Above 362.39, that will be a confirmation of the long. So I'm just marking that as above 362.39. Stop loss will be 361.44. Target will be 366.60. And here I'm about 60% confident. I'm more confident on ES because of the banks, and I'm giving QQQ a little less confidence level because the tech stocks which are not showing that kind of strength. And short definitely below 361.44, and stop loss will be 362.39. Target for this will be 350.59 first. 359, and 357. This may go more. But again, I'm still short on triple Q as of now. Apple has been showing some strength off lately, but it could not break out above 144 and close right below the 12 EMA. And as a result, one second, I don't know why it's not showing it properly. Go down, go down. Yeah. So 12 EMA is 143. So I wanted to break above 143. This is making an inside day, Apple, and a break above 144 can be really good by keeping a stop loss. So Apple, I'm giving inside day here. Buy above 144.50. Stop loss will be 143. Target this time can be much more. 147.50. AMD inside there. This is, I'm expecting it as, see, in our discussion, we talked about that. Yes, this is a bearish engulfing. Yes. But again, I'm only taking a trade above 144.50. So that will cancel out and will create a bullish engulfing. So I'm only picking up a trade if it goes above. I'm not picking a trade down because it has a gap, and if it fills the gap, it will lose the positive momentum. So that's the reason. You might try to enter here. That's also an entry, but I'll be more confident if it jumps above 144.50. Then we have AMD. I'll pick up all your tickers one by one. So AMD also is making an inside day, and on the weekly candles, on the weekly it's making a very strong base, and it has closed all the 3 times above the long-term trend line, and the 12 EMA has been following up. So this trend line of 103, 102.85 is a really, really good support. We might have a good breakout. It's a bullish engulfing on the candle weekly as well. So I'm pretty bullish on AMD. Any bounce, I'll be a buyer. So 104, 105 area will be really, really good. And 104 will be my stop loss. So yes, I'm positive on AMD. Amazon, Amazon went down, tested 32.88, closed right there on the weekly, and on the daily as well, it closed above 32.86, and it is holding this gap. Till the moment it's holding 32.86, I will not go short on it. I will still hope for a big move on Amazon. I be a buyer, and stop loss in this case will move again be 32.60. That is fine. Target will be 33.03 first and 33.64. Yes. So I am marking this still neutral. I should mark this as green. Then we have Boeing. Boeing was looking good on Friday. It opened well, tested 225, could not break out of this long-term channel. So we need a breakout from here. Now, breakout is, if we take candle here, the breakout should come around 227. A breakout about 227 can be really, really good. Stop loss is pretty small, 225. So buy about 227. It is positive, and we need a long-term breakout of the channel. Target will be 229.90 first and 239. So I'm bullish on Boeing as well. Google, target of 2800. I think it achieved 2800. Yes, it did. On Friday, it's making higher highs. So a break about 2800 should be good. In this case, a break above 2813, 2815. 2815 should be good for Google and target for 2848. Stop loss is 2769. Google, I am finally bullish. Stop loss is 2769. Target is 2848. See, Google gave you this entry on Friday, and it's looking for that again. Only thing is I'm giving 2800. NVIDIA, like AMD, NVIDIA also went and showed its strength, but it made a higher, lower high and a lower low, close below the 12 EMA. Now it should take a stop loss for 207. 207 should be a very good stop loss for NVIDIA. If it comes there, it needs to hold. And then I'll be going positive over 2942. And target will be 211 and 218. So NVIDIA's stop loss is 207, which is right there. 245, 211 this time. 211 and 50. And this one is 60% also. Facebook, it opened 335, it went down, but it could not like break out or break down big. But the interesting part is it's making pennant. If we see it on the weekly, that will give us very clear picture. This is the bearish engulfing, bang, 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 like a morning star or evening star here. And then we have back-to-back test. Previously, whenever it has back-to-back test of the 34 EMA, it has bounced from there. So now I would be interesting to see 331 if it is hold. We might see 352 on Facebook. So any dip, I'll be a buyer in it on Facebook with a stop loss of 326. I'm just marking it as neutral. Buy above 331.60. Stop loss is 326. Target is 338, 352, and I'm 70% confident here. So marking this in green. Then Disney almost tested 180 on Friday. Disney was one of the strongest stocks, but again, gave back. Now it needs to hold 177. I think it has the most potential. If index has to move up, Dow stocks are going to perform really, really well. So I'm expecting Disney to be one of those Dow stocks. So I'll be a buyer above 177.13 with a stop loss of 175.91. So everything here is same, just I am updating the stop loss. Nike has been on the roll since 147, 148 entry we checked. It's making an inside day. So most likely we are going to have a breakout. It's showing a positive strength. So a break above 153.63 can be marked as bullish towards 155 to 158. So Nike, I'm calling it as inside day. Buy above 153.63. Target is 155 and 158. Stop loss for this will be 150.71. I'll be buyer in Nike. Netflix, it could not break out of 650 and it's showing signs of fatigue. See, it's if I extend this to the right, it's closing right there. So it's showing a strength of fatigue. So in this case, if I am not positive in the market, I'll be still a seller on this. But I'm not too confident on selling side, so I'm giving a very small stop loss. And targets are pretty small, 622 and 615, because these are the trend lines here and the 12 AMA of 615. So the target is there. Then we have Shopify. Shopify almost did our target of 1420 on Friday. It tested it, test the 34 EMA and failed big. Now I was positive on it. It still made a higher high and a higher low, but it's not showing strength. It's actually making not 100% bearish engulfing because we still have some there. So I'll be trying one more time on the longer side if I get around 1356. If it gives 1356, I'll be a buyer above 1381. So I'll be a buyer above 1381. Stop loss will be 1356 in this case. And I'm marking this as neutral. Roku has been looking really good for last couple of days. It's holding on to this range. This pink block is holding onto there. In between, the 12 EMA is also catching up. And it went down, but I was looking at the volume profile here for Roku. Let me just add that. So if you look here, it's getting consolidated here. It's getting some consolidation here. And it has some good composition here. I think if it breaks about 332, it can have a good decent move on the upside. Stop loss is still 319 area, and it needs to break out above 332 because it has two candles above the 12 EMA and then it fails. This time it has three candles. So finally it's showing some level of strength after a very long time. It's able to close three candles back to back above the 12 EMA. So most likely that will become the base and it should bounce up. So confirmation, yeah, everything is this. Fine. Tesla is really a mess. I'm just removing the volume profile. Tesla is holding the 779 pretty strongly. And if it does, in between, you see it's making a kind of a pennant, a bullish flag. So I'll be actually turning around and changing my stance on Tesla towards positive, and I'll be looking for it to break out. It has consolidated enough. So I'm just changing my stance on positive, and I'll be a buy above 792. Stop loss is 79. Target will be 805, 835. I'm changing my stance on Tesla. Snap also performed really well on Friday. Went on to make 76, but look at this. It respected the 12 EMA. Tested it, closed above it. Still bullish instance. So every time it's here, 74, 75, you need to buy this. Target is still 78. W, I have included W after a very long time. So W has been struggling around this 243 area. Last time it struggled here, it had a massive move up. This time it's there, and we have earnings coming up in about a month for W. If it moves above 245, it has a 254, 256 area to catch up. So yes, it's looking pretty phenomenal in case if it breaks out above 246. So stop loss is pretty small, 243. So I'm neutral as of now. Buy above 246. Target 2, stop loss 243.30. Target is 254, 257. Okay. So these are the lists which I wanted to discuss. Now, let me just go back to the chat and pick up the tickers you have mentioned one by one. So first one is LMT. LMT is struggling. It was supposed to break out from here. It failed and it failed. And it's kind of consolidating. It's making a W on daily candles. So any move above 354, it will try to fill the gap of 366. So 354, if it closes above 354 or opens above 354, it can be marked as a bullish in sign, and then it might move up towards 366 area. Square has seen massive up and down. Like it respected 225, bounced up back to back, been rejected by 249, came back and closed below 240. It's a bearish engulfing candle, and it needs to move. It needs to close above 243. Only then it's looking positive. Otherwise, it's not getting that strength. So either you need to buy this at 225 or you need to buy this above 243. In between, I will not recommend, or I will not trade it on my side. I will just ignore this. The actual move will come above 250 and a close above 250. This time it has failed twice to cross 250. Palantir. Palantir has been struggling really, really hard. It needs to close above 224 area. And I think the EMA will come, and when it matches 24, that will be the time to enter into Palantir, not as of now. It's in a no trade zone. See, if you see it here, it's kind of making a cup and a handle, but no, it's not looking good. It needs to break about 2550 to show any meaningful move on the upside. In between, it may chop up and down, and then you may not be making anything on it. Then we have coin. Coin again got rejected by 253. We need to have 253 close. If we do, then or 253 above, we might run for 265, but it needs to move above 253, 254 practically. Affirm was making tremendous moves. As we talked about it last time, that a break above this can be massive. So it was massive. It's making higher. Close is positive. It's looking for 159. So any entry around 135, 136 should be taken for long on the Affirm. Snow. Snow was looking good with the breakout, but again, it failed and got dumped. It needs to hold this 319 area. 319 is really, really important. Every time it comes here, it kind of consolidates and fails. Right now, this is a selling area. It needs to break out about 320. 320 above close, yes, you can have some strength. But above that, no. You need to have 320 close for it to move on the upper side. Twitter. Twitter is showing some strength. So I think it's in the making of a W. So a move towards 67 is imminent. I would be a buyer on a dip around 63 on Twitter. It's looking strong. It's kind of making a W double bottom here, 57, 70. You see again the importance of Fibonacci. It tested this level and then bounced right from there. And you can test it anytime for any of the tickers which I do. These levels are tested and then bounced. That's why I do not use half few minutes candle. Okay, so it's looking good. Any dip above 63 should be bought for Twitter. Neo. Let me do one more thing. Let me just post the Zoom link so that you can all jump onto the call. And once you're here, I can drop the live session and we can talk to each other. All right, let me just set up. Okay, so you all can join one by one. And once we have people here, I'll be stopping the live streaming and we can talk. In between for Neo needs to move out 38. It needs that 38. If it breaks above 38, then yes, we can have some meaningful move. Otherwise, nah, it's not good. Dilip, Tesla I have just discussed. So I will request you to go back. Microsoft is the only thing which I have not done. So let me add Microsoft here. And I'm just keeping you all on mute for now because I'm just completing a meaningful move. All right, so Microsoft is looking good. It needs to hold this area of 292. If it does, then yes, Microsoft will move. So in this case, what I want to do is I want to stop the live streaming and then we can all talk here on Zoom. So thank you for being me on YouTube. Hope you made something out of this session. In case you still have some questions for me, you can reach out to me and then we can discuss further. All right.